Hi, I'm Nicola and I'm the Managing Director at the Mortgage Hub. If you're worried about bad credit stopping you from getting a mortgage, know that we've helped hundreds of people find a lender and get approved, even those who have been bankrupt. Bad credit or adverse credit comes in all shapes and sizes, from missed Klarna or credit card payments to bankruptcy. Usually, when a lender deems someone as having bad credit, it's because they have a poor or low credit rating, either because they have no credit history or because their credit report displays issues like late payments, defaults, CCJs, bankruptcy or debt relief orders. Yes, although bad credit can make some lenders feel hesitant about loaning large amounts, if at all, to you, some niche lenders have criteria that is more open and accepting of applicants with poor credit or a low credit score. We help first-time buyers, next-time buyers, remortgagers, business owners and buy-to-let landlords weigh up the pros and cons of the options that we find for them, so that when it comes to applying for a mortgage with bad credit, they feel confident that the lender they choose is going to approve them. Lenders will likely look at lots of factors, including your age, income, and even the type of property you're planning to buy. A key focus for many lenders will be your credit report, and they'll check the various credit reference agencies such as ClearScore, Experian, or Equifax to get a better look at your money management skills. Bad credit, like missed payments on a loan or high risk and frequent borrowing, can suggest to some lenders that you might be at risk for defaulting on your mortgage, or in other words, not keeping up with your mortgage repayments. Lenders will be concerned with what bad credit you have specifically. They'll look at the date it occurred and whether the repayments for any debt management plans or loan agreements have been paid in full and on time. The severity of the bad credit can also impact your ability to get a mortgage, and usually the more severe the issue, like multiple CCJs or bankruptcy, the smaller the choice of lenders. A limited range of lenders can result in some people with bad credit paying higher interest rates, as typically banks and lenders charge more to provide mortgages to applicants that they deem as high risk. To find the most affordable deal, ask a bad credit mortgage broker to look at your options and calculate which one would be cheaper and more financially sustainable for you. Some people don't even know they have bad credit because they've never looked at their credit reports. So when it comes to applying for a loan or mortgage, they accidentally apply to inappropriate lenders whose criteria they are unlikely to meet. This results in a mortgage rejection all too often. Always check your eligibility for a mortgage product before applying, because if you get declined, you could end up wasting money on mortgage application fees, but also a mortgage rejection will subsequently appear on your credit report for other lenders to see. This can stop you getting approved for a mortgage or loan in the future. So to avoid this hassle, check your credit report before approaching a mortgage lender so that you're aware of any issues that could affect your eligibility for a mortgage. We can help you access your credit files, often for free, so pop us a message using our online chat or give us a call for help with this. While your credit score gives an indication of your borrowing history to lenders, there are other factors that can affect their decision to accept you and how much they're willing to lend. Your age, employment status, income and outgoings, including debt, living costs, travel expenses, utilities and childcare, may all be taken into consideration by a lender who is assessing your application. They'll want to determine that you can afford your mortgage repayments as well as any other financial commitments that you have. If the loan you are applying for is deemed as unaffordable, a lender will not be able to approve it. Lots of lenders also have income multiples to work out how much they can lend on a mortgage. If you're considered to be a less risky applicant, a lender may offer you a higher income multiple, but typically borrowers can expect to be able to borrow between 4 and 5 times their annual income. This certainly isn't a one-size-fits-all rule, given that there are so many other factors that influence the maximum amount you can borrow. So for advice based on your situation, ask a mortgage broker. The size of your deposit can also affect your eligibility for a particular mortgage amount, as some lenders set minimum deposit requirements and lower loan-to-value ratios to further reduce their risk of loss. A borrower with bad credit may be expected to provide a larger chunk of the property's value up front, but that's not to say that larger loans can't be accessed with bad credit. Some niche bad credit lenders are more willing to lend under higher loan-to-value ratios, though it may be the case that a guarantor needs to co-sign your mortgage or that a higher rate of interest is charged. Getting a mortgage can be daunting, especially if you have bad credit and feel uneasy about approaching lenders and getting knocked back. We take the chore of having to search and compare lots of lenders away from you and present you with the best options based on the information you give us. Know that whatever your credit issue, we won't judge. Our love for helping people find a mortgage is genuine, and we want you to feel confident that when you visit our offices, call or contact us online, the expert appointed to you will help.